All right, it's time now to focus on our movers and shakers segment. And on top of the list is one of the big losers today, Tata Motors. CLSA reiterates a buy rating on the stock, but they have lowered the target price to 600. Sonia, this is one stock which has lost so much ground ever since it came out with the earnings. What's ailing it?
Well, Reema, that's right. The stock is down almost 30% since its record highs that it hit in the month of February of 600 or so. And the key reason for the fall in the counter is because of the slowdown that we've seen in the Chinese luxury market. Now, just to put it into perspective, 20% of JLR's total sales comes from the China market. This is versus almost 25% earlier. And we are getting some signs of a serious slowdown in the luxury market, not just with JLR. It's not a product-specific issue. It's actually an issue with a lot of the car makers like Audi, BMW, Daimler. Because of the slowdown in the economy, people are buying lesser amount of luxury cars. So just to give you some numbers, the combined China growth of Audi, BMW and Daimler weakened from 20% in 2014 to just 8% in 2015 so far, and the luxury auto pricing has also come under pressure, and JLR has borne a brunt of that. Now, CLSA says that the future looks very bleak as well. The base case growth is only 5% CAGR in the China luxury market over the next 3 years. And also for JLR, they've now started to produce one of their more popular products, Evoque, locally in China. So because of the local production, the price of the Evoque has gone down. And interestingly, customers are dissatisfied because they feel now that the price has reduced, they're not getting a superior product. So that too has dented, the pricing strategy has dented the sales of Evoque. Now, CLSA, as you rightly pointed out, has reduced the target price of Tata Motors to 600 versus 650 earlier. They continue to have a buy, but they have now adjusted their earnings estimates to factor in the slowing down luxury market in China. So they say that the FY 17-18 EPS has been cut by 11%. They assume that the JLR China plant will not be fully ramped up even by FY 18, and they say that JLR's EBITDA per vehicle premium in China over the rest of the world will contract by 50% in FY 17 purely because of the way China is slowing down. However, the stock is pricing in a lot of the pessimistic China scenario, and they recommend using the current weakness to buy Tata Motors with a 1 to 2 year view. They say that the risk reward is favorable at current levels. So it's an economy slowdown issue that's impacting JLR and nothing to do with the company specifically. Back to you.
All right, Sonia, thanks very much for that. Even as you highlight the word on Tata Motors, Mercedes-Benz says that they have completed their second phase of capacity expansion at Chakan in Pune, so perhaps getting future ready there. But PSU banks are in focus. CNBC TV 18 has learned that the Reserve Bank has now written to the Finance Ministry seeking more capital for public sector banks. Ritu Singh, who broke that news, is now here with more details. Ritu, what more can you tell us?
Samira, the Reserve Bank of India clearly is batting for the public sector banks. Now we've learned from sources that the RBI has now written to the Finance Ministry formally urging them to increase their infusion into the public sector banks. You will remember that for fiscal FY 16, the Government of India has allocated about 7,900 odd crore funds to be infused into public sector banks. In fact, last year, of the 11,000...
Okay, I think we've lost that link with Ritu Singh, but we'll try and reconnect with her and get in more details on that. But for the moment, let's also hear out. All right, we've reconnected with Ritu. Ritu, go ahead.
I was talking...
Ritu, can you hear me?
Yes, Samira.
Go ahead.
So the Reserve Bank of India, as I was mentioning, is batting for the public sector banks. Now we've learned from sources that it has written to the Finance Ministry officially urging them to increase the infusion into public sector banks, which for this year, remember, the government has announced is at 7,900 odd crores. Now this is a very paltry sum compared to the amount that these banks will require, not just to maintain their balance sheet because of the high NPAs that some of the small public sector banks have been suffering, but even to meet the Basel III requirements, about $37 billion in fresh equity alone is the amount of money that these banks will need to meet the Basel III requirements by the end of FY 19. So now we've learned from sources that the RBI has asked them to more than double this amount that they had initially announced to infuse into these public sector banks. Last year, even of the 11,200 crores that they had announced in the budget, only 6,900 odd crores were eventually infused into 9 public sector banks, and the rest of the pack was left to fend for themselves. And this is something that the RBI has taken up. And in fact, even in their monetary policy in 2 places, it has urged the government that it must look into this issue. The capital banks cannot be left to fund it for themselves. They need support at this point of time. Of course, the finance minister is meeting the heads of public sector banks tomorrow, and they will review their annual performance. They will even learn from sources that these public sector banks will start making presentations to the finance ministry come next week to pitch for their cases and as to why they will require these funds. So we will keep you updated as and when we get more news.
All right, Ritu, thanks very much for that. Earlier this morning, we also caught up with the management of Bank of Maharashtra. So here's what they had to say.
There is going to be discussion with the finance ministry, and definitely as of now, we are quite comfortable with the capital as of March 15. And whatever expansion plan we have for the FY16, I think we will be quite comfortable, but to be on a better position and above the regulatory level, we'll be definitely requesting the government to contribute some capital.
Moving on, Nalco is a big winner today. Credit Suisse has initiated coverage with an outperform rating, target price 57. Nigel, what makes Credit Suisse so bullish on Nalco?
That's right, Rima. In fact, Nalco, they have highlighted that Nalco is one of the lowest cost producing alumina refiners in the world, and in fact it's one of the few companies that are net cash positive. If you just look at all the aluminium stocks that I track, in fact they're all heavily debt laden. So a few factors that they have highlighted is that their refinery expansion, that's going to come on in the next couple of years, and importantly that will enable them to sell nearly around 80% of their total output. Currently they sell only around 66% of their total alumina output in the open market, and also it will help them to generate more cash. So even though their ongoing expansion plans consist of a $900 million expansion plan, they believe that this project, once it comes on stream, then it will generate operating cash positive, and it will help the company to remain a cash positive company even going ahead. So there will not be any debt going ahead as well. The risk, as always, there's a risk that alumina prices will crash, aluminium prices as well will crash. Remember, they've corrected a goodish bit in the last 1 year itself. They see 2 big positive triggers. One could be the Potangi bauxite mine, if they get an approval for that, and the second one could be the Utkal C coal block. Remember, these are the key raw materials for alumina business, so that's why in fact they're quite impressed with this. And also the valuation, they say it's trading very attractive valuations at current point of time. Importantly, Rima and Sumera, if you just look at it, in the past we've seen that the aluminium business used to give them a negative EBIT margins, but over the last 4-5 quarters it has been positive. And the alumina business, that has been really the cash cow, and that continues to be so. So on the back of that, in fact, Credit Suisse, they're quite positive on the stock.
All right.